Hey everyone, welcome to the Trendline Invest channel. Today, I'm going to discuss how do you identify the next outperforming sector, or rather a technique of how you can identify the next outperforming sector. A lot of you have been asking this question to me, and I thought let me answer that with something called ratio charts. Now, ratio charts are nothing but relative strength, but there's a different way to view it, and that view might give you a different perspective, and it might also help you understand whether a stock is outperforming, underperforming, or if a sector might outperform or underperform. So let's get started. I have four agendas today. One is I'll explain you what ratio charts are, how are they different from the relative strength indicator itself. I'm going to show you how to identify the next leading sector and taking some examples of from the past, and also going to show you how to identify if a stock is going to outperform or not. Now, this is a completely different take from the relative strength, basically different viewing aspect than how we see relative strength. Okay, so let's get started. So first, what are ratio charts, right? Now, ratio charts are nothing but it's there in the name itself. So it's basically nothing but a ratio, right? Now, ratio is let's take example of ITC. Now, if you want to know the ratio chart of ITC, you need to know what is the ratio that you're looking for. So, for example, I want to look for, let's say, the ratio of ITC to Nifty, right? Nifty 50. Now, what will this ratio tell me? Now, basically, if ITC is, let's say, trading at, let's say, current price 400, and if Nifty 50 is trading at, let's say, 20,000, just a random example, right? Now, when it's at 400 and Nifty is at 20,000, the ratio would be 400 divided by 20,000. Now, that's simple. But let's say ITC goes to 450, but Nifty still stays at 20,000, right? Now, in that case, basically what we are saying is ITC has outperformed Nifty, right? Let me write this example here. So ITC was at 400, whereas if Nifty was at 20,000, right? Now ITC has gone to 450, but Nifty has remained at 20,000. Now that basically means Nifty has stayed where it was, but ITC has outperformed the index. Now, can you see this on a chart? Yes. Now, what you should do is, in order to get this on a chart, you just click on the symbol search, or you just start typing ITC, and you will get this symbol search pop up that you see here. And then all you have to do is select that symbol and then press the divide symbol, or you could also use the divide symbol over here, and then type Nifty 50. Right, so when you type Nifty 50, then you will get, okay, I typed the wrong symbol. So you type ITC and then you type Nifty, right? And you get the ratio between ITC and Nifty. Now, this chart basically is dividing ITC by Nifty. Now, and this you can see is a trend of the ITC ratio to Nifty 50. Now, what this chart basically is telling you is, what is ITC doing? Now, if ITC is going up faster than Nifty, or if ITC is going down slower than Nifty, now that means ITC is giving you returns better than Nifty or better than the benchmark, right? Now, that's what you call outperforming stock. But rather, if Nifty is going down, or let's say the stock is going down, whereas Nifty is going up, then the stock is underperforming. So basically, if Nifty is at 20,000 and ITC is at, let me write that for you. So let's say Nifty is at 20,000, but ITC is at 400. Now, let's say Nifty has gone up to 21,100, whereas ITC has stayed at 400, or let's say it has come down to 390. So this case is basically underperforming, right? So this is very important to understand, because this chart, when you look at this chart, if this chart is going down, that means ITC is underperforming Nifty, or ITC is giving you returns less than Nifty. But what happens here is this chart also can be viewed like a stock chart, right? So this chart also has a trend. So ratio charts do have a trend. Now, if you look at the trend here, since 2017, ITC was in a very long-term downtrend, right? And then it started heading higher, right? Now, this we also saw it through the relative strength. So if you just look here, so relative strength was also down for quite some time since 2017, right? It was trending down, 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 and then it started outperforming somewhere around the October 21st. So now let's go back to this ratio chart that we have. So we're going to type this one, and we get this. And now if you see, there was a clear downtrend and Nifty ITC started outperforming here. Now the same rules apply here as well. Now you could say whenever the ratio chart starts forming a higher high, that is when the ITC stock is outperforming. Or you could also plot pivot, high, high, low, and you can see when this pivot is crossing the previous, when the price is crossing the pivot high, at that point is when the stock is outperforming. Right now, if you look here, this number has been continuously coming down, 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 and then finally the price crossed the pivot here. That's when uptrend starts. Right now, you could also plot the CCI also. If you, this is the CCI of the ratio chart. Right now, CCI, if you see here, no, little doesn't make sense. I'm going to close this. If you look at the CCI of the relative strength, it turned bullish somewhere around here, right around this point here. Just marking this for you so that you can look at it, right? So here, if you see, this point is when CCI turned 100, and that's when the ratio chart turned bullish. Now, this is also visible in your relative strength, but it's not visible clearly as this, right? So in case you want to look at ratio charts or relative strength in a different way, this is one of the ways to look at it, right? Now, I hope you understood what are ratio charts, because I'm now going to dive into more examples and teach you how you should be using ratio charts. Okay, so moving on, I'm going to start off with the sectoral indices and tell you how ratio charts performed, how ratio charts looked when indices started outperforming or underperforming. Now, this also can be used to identify the next outperforming sector. I'll show you how you can do that. So now I have FMCG index over here, and the FMCG index, you see, since 2018, FMCG index has been going sideways, right? And this here is also FMCG index. So I'm going to plot the FMCG index, dividing it by CNX 500. You could also use Nifty 50 as well. It's up to you, right? Now you can use Nifty 50 or CNX 500, but I prefer using CNX 500 because it has more stocks and it is not skewed like Nifty. Now Nifty, if Reliance HDFC Bank goes up, Nifty goes up. The entire world can go down, but if Reliance and HDFC Bank goes up, Nifty goes up. Whereas in CNX 500, it is not like that, right? So you can plot this and it's more reliable. So now, one thing you have to do is, if you want to get the settings, you have to go here to select layout, and then you have a lot of things here, right? Now this basically says sync in layout. Now here I have two charts plotted here in this layout, and I want everything to be synced except the symbol, because symbol I have different. So I don't want the symbols to be the same symbols, but rest everything I want to be synced in both the layouts. So I want the time frame to be the same. I want the crosshair. This is the crosshair. I want that to be the same across. I want to be the time frame, and I also want the date range to be the same. Right now, basically, if you click on this part over here, and if you zoom, you see top chart also zooming. Right now, that's something you have to follow. So always try to focus here, and then zoom in, zoom out. Your chart on top also will work out. Okay, now let's take a look at the same period that you're talking before. So since 2018, FMC index actually had been going sideways. But whereas here also, if we see, we also have the relative strength also going sideways, the ratio chart also going sideways. But something happened here in March 2020. Now that's what I want you to notice. Here in March 2020, actually this was COVID crash. In March 9th week of March, we had the COVID crash starting, and then we had 3 weeks. We had a crazy crash in markets. But what happened to the relative strength here? While the FMCG index crashed down, the relative strength started going higher. Now, why did that happen? It happened because in this week, if you see, just look at the numbers over here. In this week, if you see, FMCG index fell 9.4%. The next week, it was up 1.05%, right? So it was up 1.05. Sorry, it was down 1%. And next week, it was down only 0.74%. But if you look at Nifty, Nifty was actually down much more. Now, when you divide these two, the ratio starts moving higher because FMCG fell much lower compared to the CNX 500 or Nifty indices, right? Because of which here ratio chart starting moving up. Now here is how you have to look at ratio charts. Now when there is a breakout in the index, plus when the ratio chart also is breaking out, that's when you know that the sector is outperforming, right? Now in this case, we had a sector ratio chart breaking out, but price did not break out yet. right? Now remember, price is the ultimate indicator. Price needs to also break out always. Now you can use any indicator in the world, but if the price doesn't break out, there's nothing there's nothing much you can do, right? You cannot make money. So here, even though we had a breakout here, so it showed that FMCG was outperforming the markets, but price did not really break out from a major consolidation. Remember, since 2018, it has been going sideways. Now, if you had invested here, you would have made some money, but if we are looking for sectors which will outperform for a long time, right? And then we finally had a breakout here at this point, right? But then by then, Nifty, the ratio chart actually started falling down, right? Now, if you look from here, since this point, FMCG index actually has been going down, right? And here is when again we had FMCG breakout, but then ratio chart still did not break out, which means FMCG probably might do well, but it will not do well because the ratio chart here is not outperforming. So it might give you returns equivalent to the overall markets, but it will not give you greater returns than market yet, right? And then again, if you see ratio chart is going down, it's still not forming higher lows, but here price started moving up, right? Now again here the price has broken out definitely, right? The price is going up, which means overall the price is moving up, but it is not outperforming the overall markets. So that's very important note. The only time FMCG outperformed markets was in this time, right? And since then FMCG is not outperforming markets, because of which it has been in a complete downtrend. Now let's zoom in here. Now if you're invested here in FMCG, it's totally fine, you can still make money, but I'm looking for when you will make much higher returns than the overall market. So probably at this point FMCG wasn't the right sector to be in, right? Now that's what I'm trying to tell you. Now here, if you just zoom in here, now let's see what happened here. Now after all this move down, right? I'm just going to remove this EA here. After all this move down, let's plot the pivot point so that you know when the trend is changing, right? Now after all this move here, finally we had the first higher high forming here, right? Or you can also call it here, but here let's remove this distracting. Let's remove this. Now here, if you see, we had a breakout, and at this point is when the ratio chart started moving higher, right? And while Nifty had been almost stagnant, but FMCG was stagnant here, but FMCG was outperforming the overall markets. FMCG was giving you much higher returns than Nifty or say Next 500 here, right? And that's basically Nifty went down, but FMCG just went sideways, right? Now that's the point you have to take out here. And since then, if you see, FMCG ratio chart has been outperforming the overall markets. Now that is how you identify the next outperforming sector. Now when a sector is actually breaking out in the ratio chart, that's when a sector is outperforming the overall markets and might be a leader as well. Now you might have a few stocks in the sector doing well, but overall the sector itself might not be doing great than Nifty 500, right? You want to finally have a stock or a sector which is giving much higher returns than Nifty, or you can just invest in a mutual fund, right? It's simple. If you just have a stock which is giving same returns as Nifty, just invest in a mutual fund. It's that easy, right? But you want to look for a outperforming sector or outperforming stock. So that's the example of FMCG. Now let's take another example which might give you a much better picture, which is say Next Pharma. Okay, so I'm going to remove all of this drawings just to make it clear. And here I'm going to plot CNX Pharma by CNX 500. Okay, now let's look at this chart here, right? Now one thing here is, now CNX Pharma has been in a very long downtrend, right? Now CNX Pharma has been in a complete long downtrend. And then even if you see here also we've been in downtrend. Now there was an attempt here to head higher, but then it failed. Here also it moved higher, but then both failed. Now markets, technical analysis is not 100% probability. So there will always be failures. You just need to take your stop loss and move on. But then what happened here is what you have to notice, right? So if you look here at this point, COVID crash again. At this point here, pharma already started outperforming the markets, right? So we saw while this index was coming down, this ratio chart started moving up, right? And then we had a higher high breakout over here. So this point is when we had a higher high, and since then we had a strong outperformance in pharma stocks, right? So if you were really diligent, FMCG also could have been bought at this point. You could also bought here pharma stocks as well, right? It's up to you how you want to buy. But all I'm saying is outperformance started. The stock, the index started outperforming CNX 500 because this ratio chart started heading higher. And then it actually did well, right? So it was outperforming overall, and then it started forming a lower high, right? Ratio chart started forming a lower high, and then if you see this week is when, let me just mark this point so that it's clear. And this week is when the CNX Pharma as a sector started underperforming the overall markets. Now, while the index went up, index might not have given greater returns than the CNX 500 or than the broader markets, right? So at this point is when you should have been really cautious, and if you had probably bought, then you should have started trailing a stop loss really tight, and then eventually the breakdown in price happened here, right? So if you see, this point is when we broke that low over here, and by then pharma had already been completely outperforming the overall markets, and even till now pharma is actually underperforming the overall markets, right? But what is happening now is we are close to a major um, support zone over here in terms of the ratio charts. Now that probably indicates that the outperformance, so underperformance in pharma is probably over, and once we break out above the zone over here, pharma might give much higher returns than the overall markets, right? Now that's how you have to look at the ratio charts. Now one thing I'll tell you is what you could also do is previously used to buy a stock when relative strength, sorry, CCI is crossing 100 on a stock or a index, but now you can also see if the relative strength of the ratio chart also, sorry, if the CCI of the ratio chart also is moving into CCI 100. You could probably add this as a condition, but only if you are really familiar with other parameters I taught before. Now this is only if you are really strong in markets, you can use this technique. Consider the CCI of the ratio chart also should be bullish in order for you to buy, right? Now I'll just give an example when it doesn't satisfy. Now here if you see, CCI of the pharma index went to 100, 118, but the CCI of the relative strength of the ratio chart did not go to 100 at all. It never went to 100 until this point probably here, right? But at that point, pharma wasn't near 100. So if both are above 100, then that's a good point to buy. So that's the pharma. Now let's take one more index before we move on to some stocks, so that I make this really clear for you. So I'm going to take metal index. Sorry, let's plot metal here. Okay, and I'm going to plot the ratio chart of metal here. So ratio chart of metal is CNX metal divided by CNX 500. Okay, the same thing here, right? Now here, if you remember, the metal index started outperforming markets sometime later after the COVID crash. Now that's what you see here. Now along with the overall markets, metal index also started going down. It was almost moving in a similar fashion compared to the market. So you see, whenever the index moves up, this also moves up, which means it's not really outperforming, but it's giving almost a similar kind of returns, or slightly outperforming the markets, overall markets. And then since then, it has been going higher and higher. This is pure outperformance in the metal index. And then if you want to really buy, what you should be doing is looking for CCI above 100 here, and also CCI above 100 here, right? Now at this point is when, let me just get this point. Yeah, at this point is when we had both the metal index and the ratio chart of the metal index outperforming, right? So this week is when we had 100 in both the metal index and the ratio chart of the metal index. And then if you invested since then, we have been in a complete uptrend, right? Now here also we had a break of the previous swing low over here. It kind of broke down, but then it kind of again went up, right? Now this is why I say every tool in technical analysis always has a probability. You need to consider that, you need to invest. So that's from the index perspective. Now let's take a few examples from the stocks, right? Now one of the examples I want to take is Dawat. I also plot Dawat here. Remember, I always use CNX 500. So just to keep it standard and simple, right? Now, yeah. So here, Dawat also was in a very strong downtrend. And then finally, we had a breakout here in Dawat. CCA crossed 100 here at this point, but the stock did not cross here. Now, stock crossed 100 here at this point. And let's check what the ratio chart. Ratio chart also was at 100 at this point. And that's the point you buy. Also, obviously, we had a breakout here. But remember, ultimately, price has to confirm, right? Now, we had a breakout. CCA was 100 here. Price was above 100. We had good volumes. And also, ratio chart had a breakout, right? Ratio chart also had a breakout. Ratio chart already was in CCA above 100. But finally, we also had a breakout here as well. So, sometimes it's okay to take a position here also in the previous week before, when CCA crossed 100 here. But if you really want to be conservative, wait for every parameter B to be fulfilled, right? That's all I would say. And since then, this stock has been going higher and higher. It sure has been outperforming the markets, right? So one other example I want to take is Neuland Labs. Okay, so same thing here. Neuland Labs also had a breakout here in this week. So if we plot this, I'm using Command Option V in Mac, but if you have Windows, you can use Control V as well, right? So here at this point we had a breakout, and at this point also we had a breakout here. So this was a good buy. Neuland Labs exactly in the week of 22nd of June 2020. It would have been a very good buy, and you would have had some decent money here as well, right? Also here in Neuland Labs, if you see, we had a breakdown here. Finally, HNS breakdown in this week over here. And then here also, if you see, we had already stock underperforming the overall markets, right? So it was in sync. So whenever a stock and the index is in sync, it's totally fine. There's no problem at all. But when there's a divergence, when the stock is doing underperforming and the ratio chart is outperforming, that's when you have confusion. You need to practice a bit of that to understand when you have to buy and when you have to not buy. Okay, so I know it was a very lengthy and a complex video, but do rewind it twice or thrice. I'll try to answer any questions that you have around this. DM me on Twitter or just leave a comment and I'll answer. But if you want proper charts, then DM me on Twitter. That's much easier for me. So if you did like this video, don't forget to subscribe and like this video as well. Otherwise, I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video. Bye-bye.